Hello, ladies and gentlemen. This episode of LIBN Now will begin in just a moment. Good afternoon, everyone, and welcome to this episode of LIBN Now. Today, we're bringing you a 1-hour special on the secrets of business financing and the restaurant industry, how to get funding, the benefits of PPP, and the restaurants industry's current landscape. This episode is powered by Rock Financial. Joining us today will be Rock Financial Chief Revenue Officer Patrick Manning and Matt Tesoriero, co-owner of Guac Shop and partner of Park Place Restaurant and Bar. As always, our Zoom attendees can submit their questions at any time by clicking the Q&A button at the bottom of your screen. Now to kick off today's episode, please welcome LIBN Associate Publisher Ali Jabbour and LIBN Editor and Associate Publisher Joe Dowd.
Hello, Joe.
Hi, Ali.
This is going to be a very exciting hour. I'm thrilled to be a part of the introduction here.
Yeah, it should be really interesting. And I think a lot of people want answers to the kinds of questions we're going to pose to Patrick and Matt.
Well, a big shout out and many thanks to today's episode partner, Rock Financial, for bringing this conversation to the table and pitching us on this. I think it's a fabulous topic. And just like you said, I think the business community is going to be very interested to hear all the tactics, secrets, and stories that go into the recipe as far as financing. So I just want to one more time say thank you to Rock before we bring them on. And I wish you a good show.
Thank you.
So without further ado, please welcome Patrick Manning, who's the Chief Revenue Officer at Rock Financial, and Matt Tesoriero, co-owner of the Guac Shop and partner at Park Place Restaurant and Bar. So I wish you all a good conversation, and I'll be tuning in from over here in Ronkonkoma at headquarters. So Joe, I leave it all to you.
Thanks, Ali.
Thank you, Ali. And thank you to our guests, Pat and Matt. I want to open this way with a very big picture question. The American Rescue Plan, passed by Congress and signed by President Biden, infuses $1.9 trillion into an economy that has been devastated by the coronavirus pandemic. This has major implications for Long Island and far beyond. What would you guys say as an opening to this show? What does it say about the future here on Long Island? And I'd really like to start with Patrick.
Yeah, absolutely. It's a great question. Honestly, from this most recent plan that was rolled out, and even the prior plan that was rolled out really in the middle of the pandemic, all of this funding, and I'm going to speak specifically towards obviously business here, right, and kind of say on the personal side of it. But as far as businesses go, businesses have really been faced with a lot of challenges and adversity, throughout this pandemic. So I'll be the first to say any funding that's become available through the government, the PPP. I know the first round there were many challenges. We were on the front lines of that, dealing with those challenges. But at the end of the day, it did get capital in the hands of business owners that were struggling. And it has at least helped them a bit to face some of those challenges, overcome some of the hurdles, and ultimately be able to live to fight another day. Some businesses had it harder than others, but I would say it's been a major benefit, regardless of any challenges that were out in the beginning. Anytime a business owner can get their hands on financing, especially when the government steps in and provides it, is always a major benefit back to small business, and I think is ultimately going to help propel even our local economy here on Long Island, in the months, coming up here.
Mm-hmm. Matt, what's your take on it all?
Yeah, so I think I think that Pat nailed it. It's running the businesses and being a restaurant owner, and in the day to day. And when this hit, it was devastating. It took the wind right out of our sails. We had to make quick thinking, strategic pivots just to stay alive. And then, every single day, your business plan was evolving and changing, and you had to make amendments. So, even myself and my partners, we had no time to read the laws and the grants and the financial opportunities that were available to us. So, I think right now, we're trying to explore that and really, tap into our advisory team, people like Pat that can really help us, to understand what is available, and we could go to them with our ideas, and then they can kind of help us, make them come to fruition.
Yeah, and just to piggyback on that for a second, no businesses were safe from this, right? Even us who, Rock Financial, where we're kind of on the side where we help small businesses obtain financing that they need to grow their companies and expand. We were no different during the pandemic. Our business was wildly affected by the pandemic. Anytime there's turmoil in the economy and things like that are going on, banks really tend to lighten up and pull terms in. So from somebody in our seat where we were utilizing these banks to bring the financing to small businesses, that became a major challenge for us. We had to make our own pivots in our business. We never really did focus a ton on SBA. And in a way, I'm always a big believer that everything happens for a reason. Because of the challenges that we were faced, we quickly adapted. We put our team's focus on the SBA because that's who was making the funding available. And because we were forced to do that, we've learned so much about the SBA, other relationships, and other ways that we can continue to, get creative and bring financing back to small businesses. And had we not been faced with that challenge, forced to make that pivot that Matt speaks of, we may never have dabbled into that world where today we've assisted many clients through the SBA, again, because we were forced to learn. And it's a good thing that we did because it just made us a little bit more dynamic in what we're able to offer back to the business owners.
Mm-hmm. Patrick, let's go before the age of all of us pivoting. Let's go all the way back to the beginnings of your company. Can you talk about those days and how you started, how you got into what you do, and what are you doing now?
Yeah, absolutely. I appreciate you asking. So we actually got back into this business. Our CEO, James Webster, was the one who started and founded the company back in 2008. And the reason why he got into this business was he was getting out of mortgages. Obviously we had that 2008 recession. The economy had taken a big hit, primarily due to the housing crisis. So the mortgage industry was, obviously facing challenges. He saw the writing on the wall, and just being involved in finance, he saw how businesses were starting to take a hit, and the economy was suffering. So he wanted to get involved and figure out different ways that he could ultimately help these business owners. And through that mission, he started to kind of identify these private lenders that existed. And that's the biggest thing with the fintech industry or alternative lending, whichever you want to refer to, is 70% of small businesses don't know that private lending exists. Everyone thinks that it's the bank or nothing. So when James started to kind of identify these lenders, these private lenders that were out there, he said, wow, there's something here. So he started to establish his own relationships with those lenders. And then he would market his relationships to local business owners and basically make that connection between the business owners and these private lenders that they really didn't even know exist. Today, we have expanded on those relationships. It's 15 years later now. We're still here assisting small businesses. Back then, there was only one style of financing on the alternative side. It was like an old school merchant cash advance. You had to be accepting credit cards in your business in order to be approved. And today that has evolved into multiple different products, account receivable lines of credit, working capital loans, term loans, revolving lines of credit. So we offer a much wider range of product to our business owners today, and we can do that through 75 different banking relationships that we have. But yeah, it definitely came about because of the challenges that were faced back in 2008. And then that light bulb just kind of went off on how can we establish relationships that we could ultimately bring back to small business owners that they would be able to leverage, to grow their business.
There's an awful lot of people who don't know, as you said,
Yep.
that this type of financing exists and is an alternative to the banks. I would suspect that some of those business owners wonder, where do you get your capital from? I mean, they figure the banks have capital. How do you get the capital and keep it going? Can you give some insights into that?
Yeah, absolutely. Transparency is always at the forefront of all of our conversations with our business owner clients. So we make it very clear to everybody that we are a broker. We're not a direct lender. This is not our capital that we're giving to you, but it is our relationship. We've spent, again, the last 15 years establishing these relationships, cultivating these relationships, and really formalizing the process, right? And streamlining it so that when a business owner does want to take advantage of one of these relationships, it's not that old school inundated process that is dragged out, takes months, like, the bank, typically is. So for us, we're a broker, we have these relationships, and our money comes from those lenders that we have close relationships with. These lenders are all structured differently. Some utilize traditional, bank, lines that they have, facilities with, Wells Fargo or other banks alike. And that's kind of an interesting point of this, right? It's, a business owner can't directly go into a Wells Fargo and obtain financing because they're very strict guidelines for small businesses. But you can go to one of these alternative lenders and technically access traditional financing through one of these alternative lenders. And the reason why is the banks would much rather work with like the Apples or the Walmarts of the world that have a ton of, inventory and collateral to back the loans that they provide. So they would rather, the smaller transactions, 50,000 to 5 million really is that range where they would prefer to pass that underwriting and that responsibility onto the private lenders for them to underwrite those files and deploy the capital as they see fit. And other lenders of ours are not utilizing bank money, but simply have private investors that they have, access to capital and deploy through, situations like that. So it could be traditional bank financing, it could be hedge fund or some sort of a fund like that where they're accessing the capital, but it is our lenders that we leverage that ultimately provide the capital back to the business owners. We're just managing the relationship and ultimately pointing you to the right lender to get you the best offer for your business.
Okay, Matt, as a restaurateur and entrepreneur, both, tell me about your experience over your career with financing, getting the capital you needed to put your vision together.
Sure. So it's crazy because, Pat nailed it. I mean, I guess I fall in the 70%. Really, getting started, it was really probably about when I was about 18 or 19 years old, just kind of getting through college. Me and my two best friends and my best friend's father started a group where we were saving money collectively, each Friday. So every week we made a contribution, and legitimately it started out with $100. And I'll never forget the first day that I threw my $100 on the coffee table. It was, fives, tens, and singles to make up that $100. And then from there, it was discipline and it was a commitment. And, we incrementally increased it over the years. But at the time we were 25 years old, we had some money saved up. We call it the Candy Club. And we were able to use that money to self-finance our first project, which was Park Place in the little downtown area of Floral Park in Stewart Manor. And that was really it. We put the business on our backs. We put our own money in the game, and we built, a great neighborhood restaurant and really built our reputation as well. And then what had happened was over as the years went by, we kind of accumulated some savings, and we wanted to take another shot And that's when the Guac Shop brand was born. And, looking at it now, we're in this situation where Guac Shop is really poised and ready for a major expansion. Our $100 a week is not going to cut the mustard. So, that's where now at this point, 10 years in to the restaurant business, we're really exploring the financing options. And that's why I'm super excited, to be on this call, because I think there's a lot of restaurant owners that are out there that put their business on their back and blood, sweat, and tears. They don't ever really have the opportunity to work on their business because they're working in their business. And, somebody like Pat is able to kind of, advise them. These are the options. What are the projects that you have lined up? Like we had a devastating fire, and on top of COVID, the challenges in 2020, we had a devastating fire at our Park Place, which was like, putting a spear right through our heart. I mean, like, we put legit blood, sweat, and tears. We opened that place when we were 25 years old. And, to watch that thing burn on September 27th at the corner of Beverly and Covert Avenue, it was like somebody took my firstborn. It was really, it was devastating. And, after a couple of days of mourning and realizing, listen, the four walls that Park Place were in, they burned in that fire, but Park Place was still well and alive. So we hit the pavement. I have a little bit of a background in real estate. We started talking to all different restaurant owners in the area, and we're seeing what space might be available for us to transplant Park Place to. So we were able to do that. Double down, desperation mode. We got a great space. It was formerly known as the old Trading Post in New Hyde Park, which is fitting because that's where we're from. We grew up in New Hyde Park. We were all graduates from New Hyde Park Memorial High School. And now we're looking at this project, and it's much bigger than we've ever, anything we've ever been a part of or, done to this point. And, we had like this outdoor patio. It's like 2,000 square feet or 2,200 square feet with an outdoor bar. And it's awesome. And part of what we learned with COVID is that you need to have an outdoor component to your business. To be able to withstand these types of things. So we're going to be looking to, potentially secure some financing to put a retractable roof on there. And I'm curious, as to Pat, because, you can't keep going to the well. The well's dry. So now we have to find a new well to tap into. So I'm hoping Pat can really give us some insight on what the best options would be for something like that.
All right. First off, that's a story. Let's come back to Pat. Let's ask that actual question. So a business owner has just moved, and that business has come up with a new set of situations where he needs a retractable roof, like a baseball stadium kind of thing. And he goes to you with this plan. What's the process? How would you evaluate that? How would you guide him? Pat?
Yep, absolutely. Great question. And, for us, the process starts the same every time, right? We have a standard, electronic application that we would get from a client, just to capture some basic information. And then from there, we usually start with the most recent 3 months of business bank statements, just to get an idea of what's currently going on in the business. What does cash flow look like? What does sales look like? Just from a financial standpoint, to get a little bit of a feel for what's going on in the business. From there, we right away go into the opportunity that Matt's talking about, right? He wants to expand the restaurant, wants to utilize the outdoor space that he has. The way that he's going to be able to utilize that space to ultimately, serve more patrons, increase sales, is going to be to have this retractable roof. And that's where our marketplace gets really unique, right? Because if you were to walk into a bank, if they weren't able to offer you a line of credit or a term for your business, because one thing Matt mentioned before, and I just wanted to touch on it quickly, is that he poured his blood, sweat, and tears and really put his business on his back. And many business owners, especially small business owners, have done exactly that, right? To you have to scratch and claw, and getting with your friends and putting money into a pot is doing exactly that. It's scratching and clawing to get a business off the ground. And a lot of times when you do that, you're leveraging your own personal credit, your own personal savings. So now you go through this hard aspect of scratching and clawing, getting your business together. Now you're faced with your first opportunity. You think you can run into the bank and get the capital that you need to take care of that. And all of those things that you thought were a good thing, I leveraged my credit, I spent my money, these were good things that I did to grow my business. Those are the first things that they throw back in your face as to why you can't get the funding that you need. So what's really unique about us is once we understand the use of funds, the opportunity, how this is going to help the business, that's when we can line up the correct lender, right? So in this situation, what I would present back to Matt would be multiple options. One, we would look to get an invoice for that specific piece of equipment that he's looking for, that retractable roof. We have different equipment finance lenders, direct lenders that are on our platform that we work with daily, that would look at that invoice, have a conversation with Matt, try to get an understanding for the business, and potentially just do a straight equipment finance deal on that specific piece of equipment. And if that wasn't able to be done, then from there, we would look to leverage like a revolving line of credit or some sort of term loan where we could actually get you the hard cash that you could then turn around and use to go purchase that equipment. We have a lot of equipment lenders that actually in return signed on to our platform to refer their clients to us, because if somebody goes to them to finance a specific piece of equipment, if they are unable to approve them for in-house financing, they'll then turn around, refer that client back to us, so we could leverage a different style of financing, whether it's that line of credit or a term loan, so that then that client could get the money through a different product, go back to the equipment company and still purchase that piece of equipment. So here, we would have, 2 to 4 different options that we could look at with Matt in different styles of financing to see which is the best fit to obtain that equipment. And then also, once we identify which product of financing makes the most sense, then we can look at a few different lenders to see which lender is going to give the best offer. And that's another important aspect to our marketplace, is not only do we have the ability or the access to different styles of financing, but then when we highlight the right financing, we make the lenders in that bucket compete against each other to get you the best offer. So not only do I identify the product, but then we force those lenders to fight and ultimately drive down costs for you, so you're ultimately obtaining the best offer you possibly could for your business.
When you guys figure out that you need this particular retractable roof, how do you figure out the way you will pay for it? How do you make the equation that says this thing's going to cost me $100,000 over 10 years? I don't know what retractable roofs go for these days, okay, but it's going to cost you a certain amount of money. How do you figure out, well, that's also going to increase the amount of people I can serve on rainy days, and there are 30 rainy days in each, quarter. So how do you do the math?
I mean, listen, there's obviously an algorithm that will run through. It's pretty complicated, and there's definitely a whole bunch of factors that, could change the outcome. But, ultimately at the end of the day, it's going to double our capacity, and we don't have to worry about, rain or shine. Right now we're fortunate. We have a lot of private party inquiries, and, what are we going to do if it rains, and putting up a tent, or, the aesthetics and all that kinds of stuff. So, I mean, at the end of the day, there is an algorithm. It's a calculated risk, but, it's really, we're looking at just doubling our capacity and, being able to utilize that, those numbers to make the projections of what we could afford.
Okay.
And Joe, that was a great question, because we would ask a very similar question to Matt if we were working on a transaction like this, to understand the same thing you were just trying to figure out there, right? Ultimately, how are we going to pay for this? And that's how we would back into the right program, right? If, through that and, the algorithm that Matt's speaking of, we may determine that Matt's going to need a longer term, style of financing, because maybe that longer term will offer a lower payment, helping keep cash flow available in the business, or maybe cash flow is real strong and the projections are extremely high. So maybe we go with the shorter term financing, which is going to have the overall lowest cost of capital. So what you're actually paying for the money would be as least as possible, but maybe you're dealing with a little bit higher of a payment because you have the cash flow that could sustain, and you would rather pay the lower price tag for the capital. So it's a great question. It's another thing that we would go through to understand what style of financing is really going to, satisfy and really, help Matt the best here in this particular situation.
Mhm. I think that's something that lots of business owners, it's not their wheelhouse, the math. I think a lot of times they're visionaries or they're creative types who want to, go into business and achieve some kind of goal.
Yeah.
I want to ask you, um, what are the minimum qualifications for business financing? And
So
how quickly can you actually go to you guys and actually receive the financing in question? Can we talk about that minimum?
yeah, absolutely. Happy you brought it up. So that's like probably our biggest benefit compared to traditional financing is those minimum qualifications to be approved. We do carry about a 90% approval rating for businesses that have been in business for longer than 6 months and are generating over 120,000 in annual gross sales, which is basically works out to be about $10,000 per month in gross deposits into a business checking account. We have very minimal industry restrictions, so we can pretty much work across all industries. We lend in all 50 states. And yeah, it's basically that 6 months time in business, the $10,000 per month in gross sales to get a loan right now on an active business. But then there's also, right, there's the startups out there, before, Matt and his friends came together and pooled the money together to get, a few of his restaurants off the ground here. He was in a startup situation where if he didn't want to deploy his own capital to get it off the ground, there are routes and education that we provide back to businesses who are looking to start up to actually obtain capital for that as well. And I don't know if you ever want to touch on that later in the conversation that we can. But for an active business to get a loan today, it takes 24 hours to get funding. That's another great thing. And I think you asked that. Our funding process is basically 1 to 3 business days. So it's an extremely fast transaction. So we can definitely help get you the capital, especially if you're in a bind and need it yesterday. We're a good number to call because we can definitely work quickly. But even if you're not actively in business and you're looking to start a business, we have options for those people as well. And if there's any startups out there, we can definitely touch on that.
I want to talk about that now because I think it's
The
related.
wheels are going.
Yeah, because it's fascinating. You talked about $10,000 in gross receipts monthly
Yep.
for an existing business trying to
Correct.
expand or grow the business in some other form.
Challenge, whatever it may be.
All right, let's say I have a vision, okay, and I have this idea, and I want to build a business of fishing boats on Long Island Sound because I have a dream of being a captain. Okay.
Sounds like a real dream, Joe.
I want a hat. Yes, I want the hat and the little epaulets. Okay.
Awesome.
But I have not much to start with. What do I need to start my fleet of fishing boats, Patrick?
Yeah, absolutely. So to start a business, right, we would, number one, look to leverage our relationship with the SBA. The SBA is an organization that is extremely pro small business and has multiple products under their umbrella, one of them being startup financing. Now, I know you used a specific example of a fishing charter, but in other examples, like for Matt in the restaurant business, if it's a food chain or some type of a drawing the blank here on like a franchise level. If you look at the start of franchise, the SBA offers, funding to start up a franchise and also other, startup businesses. So we would always start with the SBA. We would introduce a relationship there and see if we could leverage any of the SBA products to start the business. Let's just say for whatever reason, the SBA wasn't working with us. We weren't able to do so. Well, from there, this is where we start the education process. And some of it is more rolling up your sleeves and getting involved and, doing things like Matt speaks about, right? Raising up some of your own capital, helping you obtain personal financing that maybe you could then turn around and use for a business. But most importantly, and this is like the number one key thing that a lot of people don't think of, but if you were looking at, 18, 19 years old, right, Matt, you're looking to start to establish your own personal financing, credit cards, thing of that nature, what are we all taught to do? We're taught to first build your personal credit, right? So start with some type of secured credit card or a department store card, something that's easy to qualify for, establish some type of a trade line, a cell phone, something that's going to report back to your personal credit. Maybe your parent puts you on as a co-signer, but ultimately in that process, when you start to establish credit, what happens? All of a sudden, more people start to send you things in the mail saying, hey, you're pre-approved for this, you're pre-approved for that. So we have a company that we work very closely with that has created an engine really that will help you establish different forms of business trade lines so you could ultimately access business capital through these trade lines. So to give you an example of somebody who's actually done this, we had a business that came to us. We plugged them into this education program on how to build business credit. And it started with, moving their lease, right? Their personal lease. They started their company. They moved their lease under the business name. Now they have a trade line under the business. Then we went out and we obtained like a Home Depot credit card and a Lowe's card. There's some of these tool companies for mechanics like Snap-on Tools, the tool trucks, that also make it very easy for a startup business owner with just a corporation to obtain a small line of credit through them. But what will wind up happening is when you establish these small lines of credit with the Home Depots or the Snap-on Tools or the Lowe's, ultimately what will happen is you'll start to get the American Expresses of the world to start to market and reach out to you and offer you a line of credit. Now you're not actively in business, maybe you're not generating sales, but you've created your corporation, you've started to set yourself up and establish trade lines, which will then ultimately lead into giving you access to higher dollar amounts and actual lines of credit that you could use to, however you see fit to grow your business or continue to pivot into different directions for your business.
Wow, Matt, what was your experience with this? Like how have you been able to increase credit lines and expand? I'm particularly interested in the guac shop and that expansion. Can you tell us about that?
Yeah, sure. So, so again, we're not really at the point where we've, went to any kind of, financing. It's really been our own. So we're kind of exploring our options now. That's why I'm really excited for this. And I know that this segment is like going to be really beneficial to other business owners because they don't even know about the opportunities that are out there. We're diving into it, but we're still at a surface level, audit into this stuff. And, we are, though, I am interested in learning about the opportunities for the guac shop expansion. We have this dream, it started out when I was in my real estate days at Oxford and Simpson. I used to go to the Hicksville Chipotle on 106, 107 over there. And I'm sitting there with a couple of the guys while we took a break from, pounding the phones. And I watch a line of like 200 people. I'm like, and the line just, it just goes through and people get up and there's seats. And I'm like, there's 200 people online, there's only 40 seats here. And it's just working. I'm like, my team can do this better. So we're gonna do this better. There is, Burger King and there's Shake Shack. And now there's Chipotle and Guac Shop. And, even though it's a little bit of a dream, we believe that we can compete with these guys if we get organized and we have somebody behind us that can help with the capital that we need, especially right now. There's going to be a lot of second generation restaurant space that comes available. And, as long as we could have, our human capital in order, there's really no saying how far we could take this. So, I'm thankful to be on this and, I'm really, really happy to see that there are, other options out there because, you get to a certain point with your own financing where you say, I think I took it as far as I can go. And, now you see where there really are opportunities where, you can put, a winning strategy together and there is no limit. There is no ceiling as long as you can continue to grow a profitable, concept.
Okay. You mentioned something very interesting. You talked about there's a lot of second generation restaurants that might be coming open, meaning there are businesses that have closed. There are empty storefronts. What would you say does the current business landscape as a whole look like right now? And where are the opportunities for people who maybe are looking for a new opportunity, but also those whose businesses perhaps failed and because of the pandemic and now want a new opportunity? Can we address that?
Yeah, absolutely. So
Matt,
absolutely. So there are, there's tremendous opportunity out there. I think that what happened with, COVID, it's a shame, and it's devastating. But, I'm a believer that you can look at the glass as half full or half empty. And, there are some people that are literally looking for a lifeline, saying, come here and, take over my store, and give me, let me go get a job and have a fresh start. And then, they're the people like us where, right now you're never going to see an opportunity where you can kind of, expand your footprint as quickly as right now, and as economically as right now. It's not easy to make money right now. It's not like everybody out there is making tons of money. It's actually very challenging to make money at 50% in a restaurant business or 75% of the restaurant business. But you could double down now and believe that it's coming back, which we're already seeing it starting to come back. And when the light does go back and they'll turn on, when the switch turns on, you're going to be in a situation where you're no longer a 2-location or 1-location operation. You have 10 or 15 locations and 20 locations with a path to go to 100. And that's kind of what we're. Listen, it's a dream of ours, but we're working that dream, and we're hoping that it'll come to fruition. And one other thing to the people that are out there, look at the businesses that are kind of like, the people that are looking for another opportunity. Look at the businesses out there that are really kind of, making these strategic pivots, and go and talk to them. Go talk to them. Create a position for yourself. I need human capital just like I need capital to grow our brand. And I'm happy to, have somebody that put their business on their back for the last 10 or 15 years join our team. Because at the end of the day, we're a growth mindset company, and it's, every day we're looking to get better, and we need good people. I mean, that's part of our business plan. We want to give, a superior product at Guac Shop to Chipotle. And, we also want to give superior service, and we need great people that are willing to do that.
Yeah, and just to piggyback on Matt, because he really did hit the nail on the head there. And as an additional vote of confidence to any small business owners out there, to first not mull past the challenges that they've had faced in the businesses that unfortunately weren't able to make it through. It's terrible. And like we put it out earlier in the conversation, none of us saw this coming or could have done anything to prevent it. So hate to see that some businesses have failed. But for those that, position themselves correctly and have made it through, from the financing side, we're seeing banks become more favorable again. During the pandemic, specifically to restaurants, nobody wanted to touch restaurants. We were funding restaurants all the way through. But even now at this stage of the game, nearing April here, terms are being extended back out onto long term. If a lender was offering 24 months, they went to 10 or 12 months during the pandemic. They're back to 24 months. And some have even exceeded. They were doing 24. Now they're showing 36-month terms. So from the financing side, what we're seeing the banks do, the banks are getting comfortable. They're loosening guidelines. They're extending terms. And we are seeing things snowballing in a great direction. So if you're out there, if you're a small business owner, like Matt said, double down. Because right now is an opportunity that it is coming back. Your business will be strong. It will be, prosperous in the future, but a lot of people have gone out, and that's opportunity to take advantage of, expand your business, go from 1 location to 3, because in the next few months, we're just continuing to near normality. And, this was a great opportunity, to get aggressive and expand your network and double down on your business. And we're seeing it from the bank side of this with what they're starting to do and what they're starting to offer to small businesses. So that just shows the trends are moving in the right direction.
On that point, uh, in real estate and in stocks, you try to buy low, sell high.
It's a very similar situation.
Isn't that a similar situation with small businesses here and maybe even moderate-sized businesses?
Yeah.
You're seeing that as well.
Absolutely. One great way to grow your business is acquiring local competition, right? If you're the local landscaper and you have 4 other trailers that are pulling through neighborhoods where you primarily do a lot of your business, you could look to acquire one of those businesses. And right now, is a great time to do exactly what you're talking about, Joe, is, if you were making the comparison to real estate, the market's low. So take advantage of that, and there's signs out there that show it's a good time to get aggressive and do exactly that.
Can we talk about, in general terms, the PPP loans and the second round that are coming? What were the benefits of PPP loans before? How does that interplay with what you guys do? And what do you expect from the new ones?
Yeah, absolutely. So the first round of PPP, the benefit was many businesses were forced to shut down, especially in the beginning. There wasn't 25% capacity, 50%, it was 0%. That's something that as a nation, we've never really experienced before, not at least in my lifetime. I did live through the 2008 recession and things tightened, but they never came to a full-on shutdown. So that, presented some really unique challenges. So the first round of PPP, I would say the benefits was, number one, the capital did get deployed. And number two, the requirements in order to get the capital were minimal. As long as you were able to prove your monthly payroll expense, you were basically, given 2.5 times that in a loan amount to use for various different things in your business. And depending on what you used it for, there was actually a component where it could be forgiven, where it would actually be free money. On top of PPP, there was also the EIDL loan that was made available to small business owners, 30 years, basically like a mortgage at super low rates, 3% is what I was seeing for the most part. I've seen approvals for 100, 150,000 in that manner. So that was extremely helpful for businesses. So the ease of obtaining the capital and just the capital being available was definitely the biggest benefits from the first round. This second round has been a little bit different. It's been a little bit slower moving. I have had business owners that I've helped get the second round of PPP. So if anybody is out there and does need assistance in that, I definitely could help them. It has been a little bit slower moving. I think that was done by design. In the first round, because it was something that the banks had never really underwritten before, there were, we've seen the crazy stories in the news, right, about certain organizations that obtained the money. People questioned if they really needed it. They wound up returning it. So I think to try to get away from some of that type of activity, they slowed the process down a little bit. And then also they added the component that you had to show prior year's financials and showed that you had a 20 or 25% loss from one quarter to the next. Many small business owners, unfortunately, they don't keep financials. So that really kind of prevented them from getting that second round of PPP, just simply because, I know I have small business owners in my own family that own local businesses here on Long Island. And, like Matt said, they work every day in their business. They don't always get time to work on their business. So their financials at times aren't really in order, which is, again, why we help small business so much, because a lot of our programs don't require you to have financials, just the bank statements. So if you're out there and listening and you struggle with financials and you need financing, we could help. But yeah, the second round of PPP, it's definitely been a little bit slower moving. Capital is getting deployed. We're a part of deploying that capital, but the requirements have been a little bit more strict and tricky to actually get approved and actually see the funding in the end of the day.
Just to elaborate, throw another wrench in there, or another question in there. So the PPP stuff, from my understanding, was great for the businesses that were established and running and had a track record.
Right.
However, there was a ton of people, and a lot of people don't realize this. Take a step back. There was a ton of businesses that were, ready to open. Like, for example, our Jericho store for Guac Shop. I mean, we were on the 5-yard line when this thing shut down. And, again, how you digest, what this cause and effect, we had brought on a ton of staff, in anticipation of opening the other store. and being able to make a smooth transition. So when we were shut down, I mean, like literally, it was like taking the rug right out from underneath us, and we just carried staff for 3 months trying to get ready. We quickly pivoted. We opened up a ghost kitchen out of our sister restaurant in Seaford, Caramia Due, right behind our ice cream concept, Spoons. And we were able to generate revenue out of there, service a new community, and keep those staff members working. Then we got our feet underneath us. We pushed to open Jericho with the conditional approval, for takeout only. But there was no PPP money for Jericho. There was really, we didn't really have time to investigate the IDL, loans and really get all that stuff. So definitely want to talk about that, Pat. And then, that's it. Then you put your head down, you got a new business open. There's no time to research any of this stuff. And, that's kind of where we found ourselves. And now that we're kind of like, getting our feet underneath us, after the fire that we experienced too, which totally, is another new business now that we just started in a pandemic. My point is, there's a lot of business owners out there that are in the same situations that we were. So like, to keep the existing businesses going, that was great. But the people that had just literally, this is their shot, they were taking their shot at the title, they got crushed, those people.
Oh yeah, absolutely. There's many scenarios like you just speak about there, Matt, where they kind of fall into a loophole, for lack of better term, where there wasn't the coverage. There's a lot of businesses out there that the way that they have the business structured legally, or how they pay themselves, wasn't able to represent that in the form of payroll, therefore didn't get the coverage in the funding that they were looking for. There were some parameters to the program, like if you were in business prior to February 15th, if you did have employees on the books under that company and the business was established prior to February 15th, and me and you could speak, privately and kind of go into specific details about that. I'm curious to learn from your experience, what was the specific component that kept you out of the PPP? But for sure, you're definitely not alone there. We've had many people come to us that just fell in very unique scenarios that unfortunately, PPP wasn't covering. And again, that is where, our marketplace being as dynamic as it is, we were able to go, okay, you know what, that government funding that you're looking for, the PPP might not be available, but what do we have available over here in our marketplace? What's another style of financing that maybe we can utilize right now to help get you some capital in the business to kind of, work through this tough time? So that's, we always revert back to that marketplace. That's kind of like our Swiss Army knife in our back pocket. When we run into sticky situations, if we were just offering one specific type of financing, there would be so many scenarios and businesses out there in the past that we simply just would have not been able to help. In fact, very rarely does somebody come in knowing exactly what they're looking for. We have it, give it to them, and it's a one and done. Many times we, evaluate and look into multiple forms of financing before we find the right product. We had a woman come to us recently who has blown up on social media. She's a social media influencer. She started selling hair product on social media, and did a phenomenal job of doing that, got to $1 million in sales, and then in 1 year jumped from $1 million in sales to 12 million, and just experienced a tremendous amount of growth. Had this immediate, intense need of capital to purchase inventory, be able to fill the orders that were coming in from her various websites that she has online. And when she came in the door, she thought she wanted long-term financing. I need something, 10 years, 5 years. But when we started to look at the cost of the capital on that length of term, we actually realized that short-term funding that we have access to was actually the better fit for her, because it was going to keep her paying the overall lowest cost of capital. But we basically structured her in a 6-month term that kept the cost of the capital extremely minimal. So she was paying super low cost for the money. But also, because we're not the traditional bank, we're very flexible in our programs. When you reach 50% paid into our program, we allow you to refinance. So what ultimately happens is every 90 days, she's finding herself getting access to additional capital, refinancing the old debt. We forgive interest on the old debt, so you're not stacking interest on interest. But she came in, again, looking for this long-term, I'm going to need this long-term financing. We actually found that the best fit from her, from talking to her CFO, was short-term financing at a super low cost, but ultimately allowing her to come back to the well and continuously access capital on an every 90-day basis. And now she's like clockwork. Every 90 days, we're re-extending terms out to her, $500,000, $700,000, $800,000 for her to go out and purchase inventory and continue to grow her business. So yeah, we would leverage that marketplace and figure out, hey, if this isn't working, what else could? And we would find a solution.
Now, Patrick, are there closing costs the way there are on real estate on loans like that?
Yep. So great question. I always want to put that out there. Anytime you go for any type of commercial financing, you should always anticipate some type of a closing cost. What I will also tell you to look out for is if you are working through a broker like myself, not every broker, cares about their reputation or builds the brand the way that we put a focus on doing so. So be careful with brokers that are out there. They will try at times to slide in hidden fees. We're very transparent on the upfront of all of our transaction and identifying all of that before we even get started. But our lending partners will charge origination fees, the actual banks that you take the money from, and any commercial financing. You should always expect some type of an origination or closing cost to be involved, but they should really never excess like 5%. And you definitely want to make sure that brokers aren't matching the bank percentage. We've seen that a lot with our customers that have come to us from a different broker, and they thought that they were paying a 2% fee, but they wound up paying 4% because the broker basically matched the lender's fee and kind of slid it in there. So just education, awareness, back to business owners when you are obtaining financing. Number one, first and foremost, make sure the person that you're sharing your crucial and private information with, to be credible, that has an online presence, has reviews, probably even somebody else referred you or recommended them to you. If you find yourself on the phone with somebody that you don't really know from a hole in the wall, doesn't have an online reputation, that should be your first sign to take a pause, do some homework and research, and make sure that you're working with a credible source.
Okay. I want to talk about briefly the penultimate question that I have for you today. Sure. Is what do you both see post-pandemic in a period where, let's say, the only reason to wear a mask is because you feel more comfortable doing it, where we reach herd immunity, where our businesses and our economy is humming. What do you see for the future at that point for the restaurant industry and small business in general? I'm going to start with Matt. Okay.
So I think there's pent up demand. I mean, I think a lot of people are really, eager to get their lives back. So, we're excited for that too. That's part of the reason why we're saying double down and go, expand the footprint and go big, because I think it's going to end up paying off, because I think everybody just wants to get back to their normal, their normal lives. However, I will say, looking at restaurants go from 100%, which was basically chair to chair. I mean, most of these places you were touching the people behind you. I don't know if that kind of closeness is ever going to come back. But I think that, I think people will definitely are looking for opportunities to come out and get back to, life as we knew it, and really something to be normal.
Yeah. Yeah, I think Matt hits the nail on the head there. This is America, right? Land of the free, home of the brave. So people do not want to be tied down. When it is safe to return to a normal life, I agree with Matt. I think there's going to be some, just pent up energy to get out there, get going again. And I think that this also, really forced business owners to become dangerous, right? I mean, Matt, you've mentioned a few times of different things like ghost kitchens that you've done to continue to get creative. You mentioned a lemonade stand, an adult lemonade stand that you had put together. So business owners are always high energy, very active people, motivated to be successful. And I think when you put a business owner in the corner and you force them to get creative, they're now going to take these tactics that they learned and in a normal lifestyle apply these. And I think businesses are going to come back with a vengeance. I really do. If you take a guy like Matt, who was already savvy, already educated, already motivated, but then you forced him to sharpen these new tools that he didn't even think of in the past. You might not have ran a ghost kitchen in the past. You wouldn't have had a need to. Maybe now you go back, you get your business back to where it was, but you continue to run a ghost kitchen as another, form of income, a revenue channel back into the business. So, I just think, again, when it's safe, when it's the right time to do so, people are going to be looking to get back to live their lives. It's just who we are naturally, right? But then also just what we faced. I think it made a lot of people level up and have really sharpened their tools. And I think you're going to see that in the way they run their businesses moving forward.
Nailed it.
Matt, how many guac shops are there, and where is the one in Jericho?
Okay, so Jericho is located in the Frank Steak Shopping Center, right on Jericho Turnpike next to the Kohl's. Kind of where Jericho Turnpike and the LIE kind of intersect there.
Right.
We're just west of that. Which, we placed a huge wager. This is obviously way before pandemic was even a twinkle in anyone's eye. We placed a huge wager on the Jericho office parks, Jericho Quadrangle, Jericho Plaza.
Sure.
And I mean, like, we drive past these buildings and there's like 20 or 30 cars in the parking lot. There's, so we're anxious for corporate to come back, because that's going to add a huge component to our Jericho store. We signed a lease in Wantagh on Wantagh Avenue in Jerusalem in the Willowwood Shopping Center. Real excited about that. The space was formerly Stewart's. And it's going to be great. We're between our Wantagh store and our Jericho store, we're going to be introducing a private party, like an on-premise private party component to our business, which we're really excited about. And the goal with that was, we kind of did our survey of the market, and we saw that there wasn't really an inexpensive, private party option for that, like 25, 30 person private party, need. So, we're looking to do that with, prices starting at about $20 per person. So it's going to be great for kids, for post-game celebrations, for pre-game, things, for corporate team building events and all that kinds of stuff. So I think that's going to be great. And nobody knows this yet, so I'll give you guys a little insider, but we are going to be opening up our first express model in Freeport. So we're going to be right there at the corner of Guy Lombardo and Atlantic Avenue, and we're really excited about that location. And just to go full circle with what Pat was saying before, we would never in a million years have come out with an express model concept if it wasn't for COVID. And when we opened the ghost kitchen out of our Seaford store, I mean, we were in like what's probably smaller than what most kids' bedrooms are on Long Island. We were, that's where we're executing that concept out of. And that's what gave us the idea to say, listen, we could take over this second generation space over in Freeport, and we'll be able to service that community. We will be closing the Seaford Ghost Kitchen store once Wantagh opens. I know a couple of people have been asking, isn't that a little close? Well, basically, we were able to test the market with the Seaford Ghost Kitchen. And now, since we've had a great response and unbelievable support from the community, we're going to jump back over into that big, it's going to be our biggest store. It's about 3,000 square feet. We're really excited about it. And we're community guys too. That's the big thing, is like, we want to get into the communities and give back. We're real big on the youth organizations. We're going to do online ordering, fundraising, and all that kinds of stuff, because that was another pivot that we made. We used to do burrito rallies where we would have a line of people line up and they come through the store. Can't do that with COVID. So what we did was we decided, listen, DoorDash, Grubhub, and Uber Eats, they're procuring all these orders and they're taking a handsome commission. Why don't we offer that to the organizations out there? It actually was another great layer that we added to our business model. And it shows that we care, we give back. We want to give these people an opportunity to earn funds for their organizations.
That was a great summary of where you are and where you're going.
Yep.
And I want to leave, though, the final word with Patrick Manning. Pat, give us your summary of what is the most important message that you want to send today, and specifically to our business audience who has learned a great deal from both your participation today. Patrick?
Yeah, I appreciate that, Joe. And it's simply, we're here to help. right? That's ultimately the message that we want to get out there. We understand small business. We understand the challenges that typically come up in day-to-day small business operations. And we know how difficult it is to deal with traditional bank lenders, which is why we put together the platform and the marketplace that we did. And you know, again, it's just to simply bring awareness to small business owners or people that are looking to start a small business. A great place and a great resource would be connecting with us and seeing what education we can provide to start to establish business credit trade lines to get you introduced to that world, but then also leveraging the multiple different financing options that we have available through the array of lenders and relationships that we've established. So I'm talking to that 70% of business owners out there that just think, hey, it's either the bank or nothing. Or, you know, a lot of business owners too think, hey, if the bank says no, I have to go out and give up a piece of equity in my business to bring in a partner. And I can tell you right now that doing that is the far most expensive form of financing that you could possibly obtain, is giving up equity in your hard-earned small business. So before you do that, explore all options. And if you're unaware of what those options are, hopefully today, by being introduced to myself and my company, you know, you've learned of a new resource that you could tap into and ultimately find funding in areas that you didn't think were possible.
That's terrific. Gentlemen, you have been a great resource for our readers and have given us a lot of food for thought. I want to thank Matt Tesoriero, the partner at Park Place Restaurant and the co-owner at Guac Shop, which I have a feeling I'm going to head to on Jericho Turnpike pretty soon. And also Patrick Manning, the Chief Revenue Officer at Rock Financial. Thank you for sponsoring this as well, Patrick.
Absolutely.
Appreciate your appearance.
Yeah, no, appreciate your guys' time today. Thank you.
Thank you, guys.
And for everyone at Long Island Business News, I'm Joe Dowd. Stay safe and good luck.
Thanks for joining this week's special episode of LIBN Now. Don't forget to join us next week, where we'll talk with two nonprofit leaders on the importance of developing a strong board. To watch past episodes and to submit your questions ahead of time, go to libn.com/LIBnow. Thanks again for joining us, and we'll see you next week.